everybody. Happy Tuesday. How you doing today? Hope you're having a good day out there. This is The Closing Beat. It is a live stock market update show that we do every single day, although we probably don't need to do them so much here lately. We could probably take a break. What do you think? The market's been pretty quiet. Anyways, we're financial advisors here at Jazz Wealth. Thank you for keeping us in mind, by the way. If you need help with your long-term investments, you have a financial advisor maybe you're working with, and they're just not moving the needle for you, or you're looking for more help, more advice, or a fiduciary, SEC registered. We manage our own funds and everything, so a little bit different way of doing things. Hope you'll check us out at jazzwealth.com. We're also playing a game. It's called Guess the Dow. If you can tell me where the Dow is going to close next week, we'll send you a $100 gift card. Every Friday we announce a winner, and so you play along there, no strings attached. You probably ought to just guess the Dow to not move at all. Besides today, it really hasn't done a whole lot. But we'll go over that here in a little bit. One stock actually caused the Dow to move today, and one stock was responsible for the entire decline in the Dow, actually. We also do weekly classes for our customers. This Thursday, we're going to be talking about the deadlines for different types of transactions you may want to make in your account, whether they are rollovers, Roth contributions, Roth conversions, reverse rollovers, things like that. We're going to go over all the deadlines you need to know, so you know whether you need to get something done here before the end of the year or not. Every week we do classes for our customers, and besides next week because it's Thanksgiving, and so we just try to keep helping people learn little by little. There's also a full archive in the dojo. It's like a Netflix of financial advice just there for you guys, recorded videos of all our previous classes. All right, let's talk about the stock markets today. The Dow down by 102 points. The one stock that caused the decline today, Home Depot. Home Depot was the reason for your decline there. We'll talk about the earnings here in a little bit. You got the S&P flat, just again, lost 1 point on the day, basically doing a whole lot of nothing. We'll kick over to the charts here so you can see. But the NASDAQ was up 20 points. Here's a look at the S&P 500. We have one pretty exciting day in there. Well, it would seem exciting relative to everything else. But other than that, it has been pretty quiet. And today there was a little bit more sort of weakness under the table there. Retail, of course, energy and things. And so it sort of led or what did it do? It kind of like set the tone for, hey, maybe we pull back a little bit from here. Today was the first time we really saw that. Otherwise, we've been pretty quiet here. We've actually now gone on 28 days where the stock market has not had a range plus or minus 1%. We covered those volatility stats and what to expect going forward in our class last week, but that's pretty much it. If we look at the Dow, that was the focus because that's the bigger number on the day. You can see that already started to pull back down 100 points today, and the excitement is going to be because of Home Depot, your biggest loser in the Dow, down 5 points on the day. Earnings were basically as expected. Revenues came in weaker than expected. Sales were the big focus. They were up 3.6 versus about 4%, which was expected. So they missed on that aspect. They also lowered their sales outlook going forward, although they said the consumer is actually still spending quite well. Nonetheless, I mean, there was a lot of things to focus on there. I saw on every major financial media today and every financial publication, they focused on one headline, and this was the quote from the CEO. One of our issues was, quote, the timing of certain benefits associated with one of our Home Depot strategic investments, although they wouldn't clarify that on the conference call, so it left people a little bit curious and frustrated. The stock down about 5.4% on the day. It's up 15% just in the last 3 months, so a little 5% down day today, not a big deal. It's 39% it's up for the year, so in the grand scheme of things, it was pretty much a small pullback today, although it was a pretty shocking little move if you happen to take a look at that. Did you happen to see the Fed chair made its way to the White House the other day? President Trump said, hey, Mr. Jerome Powell, come on by the White House. Let's talk about this. And he tweeted out that he did push for lower rates and everything. The Fed says, or Mr. Powell said, we're good with where we're at. But this made me think, how many Fed chairmen visits to the White House has there been? So we went back and looked all the way to Ben Bernanke. Ben Bernanke visited the White House 23 times, 10 times to see President Bush, the other 13 to see President Obama during and as we made our way out of the financial crisis. Janet Yellen was the latest Fed chairwoman. She visited 5 times, 4 times to see Obama and only once to see Trump. And Mr. Jerome Powell has only visited the White House twice. This would be the second one for him there. So I don't know, just kind of interesting. There's weird things that I think of that I want to look up, but sometimes they're helpful. Hey, one of the economic news events that came out today was housing starts. They came out better than expected, but housing starts were better. Here, I'll just show you. They were better because of multifamily units that came out, which is not really great. You like to see housing starts from a single-family perspective. It's better for the overall economy. It's generally known as a more sort of economically stimulating if there are more single-family homes out there. Nonetheless, the number came in better than expected. Single-family homes were up 2%. Which is okay, up 8% year over year. Here's the interesting thing about this. We talk about these econ numbers. What do they really mean? Here's a kind of a fun fact for you. If we look at the history, going back to 1958 here, if we look at the history of housing starts and then we just kind of go, hey, let's take a look at all the recessions in the background. There's a fun fact that housing starts are a leading indicator to a potential recession. Well, I don't know if you could say it like that, but I'm going to say it like that. So if you look at, let's go as far back as we can here, housing starts are always in a decline before the recession. Here's the next one. Already downtrending before the recession. 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 And you guess what I'm going to say next. So the gray shaded area in the background is those are the recessions and length of time during the recessions. And in every single instance, you have housing starts in a downtrend before the recession starts. Where are we at currently? Here's where we're at, over here on the right. Not currently downtrending, but moving sideways, not gaining any momentum either. So is that an indication? Well, a lot of people are going to look at that and they're going to see, well, if this starts a little bit of a downtrend, and we obviously compare that with everything else and add that to all the other metrics that people use to identify potential recessions, you've got another indicator that you can look at. So what do you think? Is that kind of helpful for you? That just another little bit of learning there we can sneak in. Let's move on to the individual sectors today. Oil finally rejecting the 200-day moving average after being back and forth for a while, looking like it was going to be above, then below, then above again, and below again. Well, this would be considered a full rejection today. A wide range day, meaning from high to low, there's a big difference, in this case over 3.5%. That's known as a rejection there at the 200-day. That should solve that issue there for the short term there. So energy was weak today. A lot of the energy-related areas were weak on the day. Another weak spot in the market was retail. We talked about this last week. Walmart is sort of the quiet end to earnings season. It's not the official end. We still have earnings coming out. But when Walmart reports, we all basically say, okay, earnings season is over. There are some retail names and some Chinese names left to report. But that's kind of it. Well, that's where all the excitement came from today. We had retail stocks reporting earnings and pretty weak across the board. We'll cover those in just a second. So retail names, and then tomorrow retail names coming out as well. So retail was the sort of focus today. Consumer discretionary stocks, they were lower on the day, but largely because of Home Depot. You could use the XLY or look at the sector as a whole. Home Depot makes up about 11% of a weighted sector, so XLY down mainly because of Home Depot, just like it took down the Dow today. Semiconductors look like they started their pullback just a little bit, which would be totally okay. It's had a great run here. To see a normal little pullback, I don't think anybody would really care. Because of some of that weakness and some of the comments from President Trump today about raising tariffs if we couldn't get a trade deal done on China, again, we're back to talking about this, you had a reason to think protection. If you look at bonds, same thing there. But if you look at silver, got a little bit of a bid today, up about 0.5%. Gold also saw a bid today. Not much. It was stronger earlier in the day. But people had a reason to say, okay, I'm gonna go play it safe here and try to play some of these areas. Healthcare was strong no matter what, man. It did its own thing today. Biotech, strongest area of the market today. So a lot of biotech stocks were strong, and healthcare in general. Here's the XLV continuing its push, right? We've been pointing this out early on to show you that momentum, that money moving into this area, and it continues to do so. We covered Home Depot already. Now you know the reason for that in the Dow and the consumer discretionary, things like that. Kohl's was another retailer that reported earnings, really hit hard today. 20% down on the day. Very, very high average volume. Why was it down so much? Well, this is their biggest earnings miss since 2014 actually. Store sales were strong. Remember, these guys, how do you say it? They, you know, when you order something online, they go, well, would you like to ship it to the store or would you like to ship it to your house? Well, Kohl's decided, well, we're just going to ship it to the store and you can come pick it up in the store. That's worked out well. Actually, orders have been up and everything. They also partner with Amazon. Remember, I think this is like close to 6 months, if not 6 months ago. They worked with Amazon to say, tell you what, if you buy something on Amazon, you don't like it and you want to return it, you can return it to a Kohl's store and they will have an Amazon portal there to take care of it for you. Well, that worked. Kohl's at the time was sort of given a lot of grief for that, but it actually worked. It got people to go into the stores. Their traffic in their stores was higher. Online traffic was higher as well, but traffic to the stores was higher. The problem is, although it did increase revenues, it increased costs as well. Gross margin was down by about 2%. And so a couple of those things going together, and people were like, wait a minute, maybe this is an issue. Maybe people aren't going out and shopping as much. They're sort of using these stores. Well, TJ Maxx combated that throughout the day. They reported earnings as well, up about 2%, beat on earnings, beat on revenue. Store sales were higher, strong consumer demand and all that stuff. So a lot of people were kind of like, all right, well, Kohl's is maybe a one-off. And that's why you didn't see a real beatdown in the entire sector today, if you happen to follow that. There's a lot of retail names coming out for reporting earnings. Tomorrow being Lowe's, Target. I have a list here somewhere. Lowe's, Target, Limited Brands, Lazy Boy reporting tomorrow. Jack in the Box, not really retail, but you get what we're saying there. So a lot more retail names to report. So that story that came out today was, well, tell us about the consumer. Are they good? Are they bad? What's going on? It was sort of left with a mixed bag today. You know, tomorrow we'll have a more more confirmed kind of an outcome on what's going on with the overall consumer. A couple other stocks in the news today. Slack. Symbol work, the ticker symbol WORK. This is Slack. Stock was down by about 8 1/3% on the day. Microsoft announced that they had 20 million Teams users. So Microsoft has their own sort of Slack, and it's called Teams. And if you don't know, when you did the latest upgrade of your Windows, Teams just pops up. It's like they loaded it to automatically start. And it's also free for Office 365 users, but Teams now has 20 million daily active users. Well, Slack has like 13 million. And so the question there is, oh my God, Microsoft could just dominate and take over Slack because Microsoft can give it away for free for 365 users, whereas Slack, yeah, they give you the free version, but they hope that you come along and you want to pay for the of course, paid service as well. So Slack was down about 8% on the day. That's that one. What else do we have here? Disney pretty much flat, yeah, about a 0.5% gain on the day, chopping around there near highs. There were multiple reports. I didn't look to see, like, was this sort of just a rumor or was this confirmed or anything? So I'm not sure about that. Multiple reports that hackers had stolen thousands of Disney Plus users' accounts and they were selling them for anywhere from $3 to $11 on the black market on the internet. So that's Disney. I don't know if there was any comment from Disney or anything, so maybe we'll follow up with that one. AT&T also lower by 4% today. They were downgraded by Moffett, and they said, look, wireless for AT&T is going really well. The rest of their business is not going so well. Well, wireless makes up 40% of AT&T's business. That won't be enough to support the 60% of their business that's not doing so well. And so because of that comment, and some other things like that in the analyst report there, stock was lower by 4% on the day. Also, it's had a good run, so the fact that it's pulling back a little bit doesn't seem to scare a whole lot of people. Just a bit of a down day there. I know a lot of you would like some discounts for your dividend portfolio. 67% of the S&P 500 was above the 50-day moving average. It was actually 66.9 to be exact, but nonetheless, we're trading within a range of 65 to 69%. So pretty quiet in terms of real strength, right? So it's just kind of holding up there. Financials, industrials remain at the top. Utilities, energy remain at the bottom. There were 41, I believe, new 52-week highs. There were only 9 of them that closed negative on the day, so let's just call that a quarter percent. TJX was one that we talked about a second ago. They fought sort of that retail weakness that we saw overall. We mentioned biotech being strong today. Vertex was the strongest biotech in the mix, up 2.3%, and also hitting 52-week highs as well. You got names like Microsoft and Apple. They're in the 52-week high list as well. The biggest loser out of the group was Xerox, down 1.55%, so it gives you an idea. Hit new highs, down only 1.55%, not a big deal. Little overextended in the short term if we show the chart here. And also questions about that deal with Hewlett-Packard. I mean, what are they going to do? Is Xerox going to go bid more than $22 a share? Yesterday's Hewlett-Packard basically rejected them and said, try again. That's not our price, which is fair, right? Some people, you know, you're selling a business and, well, they're not selling a business. Xerox is offering to buy it. But, you know, when that sort of thing happens and people say, I'll give you X for it, and you're like, no. What's a nice way to say, go try again? So they didn't counter. They just said, try again. Give us another bid and see what you got there. You also have FTNT on the new high list. Incredibly strong stock here. Very strong here in the short term. It's really great. but also hitting 52-week highs, very much overbought in the short term. On the downside, you got Delphi, same names. You got Delphi hitting new lows, Fossil hitting new lows, and I believe Centerpoint. Yeah, Centerpoint broke to new lows as well, although did close well off of its lows for the day. Yeah, that's pretty much what I have there. Roku, I know some of you like maybe trading the Roku there. Stock was down by about 4% today. They're doing a 571,000 share secondary offering, but the catch there is they could go up to 1 million shares, and a lot of people think they're going to go up to 1 million shares. So that was Roku's weakness today. Uber, I don't believe it did a whole lot. It was just kind of flat. Yeah, up 1%. They lost their chief product officer over at Uber, so didn't seem to affect anything here today. You also have analysts, and this is going to happen through the rest of the year. You're going to have analysts and the financial gurus and the trading people. They're all going to come out with their 2020 stock market predictions, their guesses, where they think the market's going to go. This is kind of that one time a year where no matter what you cover, if you're an analyst that covers retail or tech or whatever, this is your chance to come out and say, here's where I think the market's going to be next year. Also, the higher ranking analysts at a lot of these companies get a chance to kind of make their best assumptions as well. Well, at Goldman Sachs, we got that report. They said they think the markets are going to finish basically 9% higher next year. So they are predicting a 9% gain for the S&P next year. Morgan Stanley says, nope, minus 3.9%. It's going to be a volatile year, back and forth, minus 3.9%. And UBS basically said the same so far. Remember, over this week here, over the last 10 years, the S&P has averaged a gain of 0.7%, and AutoZone is the better performer out of the group. Typically gains 1.93%, median gain 2.06%. It's only lost one out of the last 10 years. It lost in 2011 over the course of this week, only this week. It lost in 2011, minus 4.84% for the week. 90% of the time it's positive. So far it's still got a little gain on the week, but not quite 1.9%. We'll keep following up with that to see, I don't know, just for fun. As far as dividends, ex-dividend day, Microsoft 51 cents, Moody's 50 cents, Discovery Financial 44 cents, Applied Materials 21 cents. We happen to own a handful of those in our funds here at Jazz Wealth. Also, for you S&P 500 replicators, there's a company, ServiceNow. Put it on the chart here for you. Got a little boost today, 4.25%. ServiceNow is going to be replacing Celgene, biotech stock. They're going to be replacing Celgene in the S&P 500. So that'll happen next week. No, later this week. What's today? Today's already the 19th, 20th, 21. So that'd be Thursday. ServiceNow is going to take over in the S&P 500. I like to point out those changes whenever I can. Well, I'll attempt to take your questions here, but it's kind of overall kind of a quiet day. Yeah, AMD was a strong one today. AMD is sort of that runaway freight train where people go, where's the performance? Go buy the performance. And so more and more volume coming into AMD, up 3.5% today. Yeah. Interest rates still going down. Just got an email. Oh, maybe for like a savings or something like that. They're doing that. Yep, adjustments to the downside. They're just adjusting that now. Or you just got the alert, I guess. Tesla, yep. So don't forget about, I'm sure it'll be all over the news there, but Tesla a little higher today. Yep, about 3% on the day. They're supposedly announcing the Tesla truck on Thursday. That should be interesting. I haven't looked up to see any pictures there, but that'd be cool. Yep, that was a little bit of the weakness today, a little bit of trade tensions there, especially, Trump kind of starting the discussion. That's just one of those things. You say that, and then you go, well, maybe it'll make its way back to China, and they'll give us a call or something. I don't know. Is iRobot a good long-term bet? 44 to 45 is what you're betting on. I mentioned this before. I don't think iRobot is one of those stocks that you have to try to guess the bottom. I would prefer to see it bounce first, let the bottom become in place, miss the first 5 or 6%, and then just go at it from there. That is a really steady, consistent downtrend there. It's really tough to say, pick the bottom of that stock. More thoughts on Luckin. You think it's going to go over 31 by the end of the year? That's a tough one. Come on. You had a really great, way above average move on this stock here after they reported earnings, and they killed it. I mean, in terms of stores and everything and their growth model. But do you see it going way up there by the year end? That's a tough one. I think it's going to chop around inside of this, unfortunately, very wide range for a while. Need time for things to catch up. Stocks don't like to go too far too fast. They do take breaks, just like you would if you ran straight up a hill. But as far as the company going and how fast they're growing and have proven that they can grow that fast, that's impressive. Yep, that's impressive. How does a stock get added to the S&P when one gets taken out? Like Celgene. When a stock is bought out or no longer meets the criteria, then they switch it out. That's pretty much it. A lot of times underperformers get taken out of the S&P 500. Yep. And then they announce it. Usually it's about a week ahead of time that you get to see that. Yep. Do you think CVS can get back to previous highs there? Well, I mean, eventually, yeah. I mean, they're doing really well. We happen to own this one in one of our portfolios, so it's one that I look at closely. I don't like when they go too far too fast. To me, a little too far too fast. I mean, I'm happy. It's fine. It's a great kind of supporter for us, but yeah, you'd like to see it take a break. So I'd be in no rush to get it back to highs if it meant that it could take a break in here. It just means more in the long term. You saw the email notes from Jazz going, is it going to be a weekly or monthly thing? I was thinking about doing that every week. I realize a lot of people don't have time around the holidays to watch our private classes for customers, so I thought I will kick out an email to all of our customers. I hope to put in there a general lesson, a market update, a fin tip, as well as some stats. So it'd just be sort of a short weekend reading material for our customers here. Glad you liked it. Well, you didn't say you liked it, but I hope you like it, and if so, I'm glad. I love it. How do you calculate cost basis if you reinvest all your dividends? It should be done for you, I would think, right? Dividends being reinvested is the same as taking cash and investing in a position. So your cost basis should adjust it with you. Any platform should just automatically adjust your cost basis. Or I should say, any platform should adjust your average cost. There you go. Yep. Any thoughts on NNN? Well, no. So, I mean, it's a good one if you're in it. So I would say if you're someone that already owns the stock, is there a reason to sell it, panic, get out or anything? No, not at all. It's a little bit more volatile than some of the others in their group. But is there any reason to just run away, be scared or anything? I wouldn't say there is at the moment. It's just a more wild uptrend than you'd prefer to be in, but nonetheless, still an uptrend. Yeah. You think the markets are due for a sharp pullback in the short term, being cautious? Yeah, there's a lot. I'm getting more and more calls and questions about those sort of things. People just saying, look, this is what I have, and I fear that the market's going to pull back. Yeah, I mean, it's in the short term. If people that want a discount, I can't blame you. You're looking for the airlines in 2020. Well, I hope they're able to get convincingly get that 737 MAX up in the air. There's clearly high demand for it. Right now, the Dubai Air Show is going on, and I believe they got 51 orders for the 737 MAX jets. Which was more than expected. I think everybody was expecting 30 to 35. So the fact that people are still willing to buy them, even though they are not allowed to fly them, buy them to have them made, I should say. That's a good sign. So I hope that's a good thing for American Airlines. It's not like a big dent in their current process. Really, American Airlines' big issue right now is the union negotiations that they're going through. So hopefully 2020 is a year where they can get the planes back in the air and they can also get through this mechanics union negotiation. So we'll see, Same thing with Southwest, except they don't have the mechanics issue. Robinhood doesn't have auto dividend reinvestment. I didn't know that. That's interesting. I don't know why, or I wonder why, but I didn't know that. If you're not a customer, what's the cover charge for the jazz bar in the lounge? Man, I tell you what, you bring something to drink and you can come hang out. Bring us something to put on the shelf there, a bottle of whatever you like to drink while you're here. But it's got to be under $100. Please don't. Some people get carried away with that. I have to send anything back that's over $100. Please don't. I'm just joking, essentially. I have to have that on record. Oh, you work for them. That's cool. So Nucor Floating around the 200-day, you're happy to see that come out of the downtrend there. So we talked about this, it looks like way back in April, because I've got a little line here trying to illustrate the downtrend. We'll stretch it out. Here's your break of the downtrend there. You can see everybody a little bit happy that it's finally stopped bleeding lower. So in the short term, you expect to see that continue, even if sloppily, to the upside there. So we'll see. What books do you recommend for someone interested in the stock market? I don't know that there's so much. I don't know that there's a book that you can read that somehow, like, it depends on what you're trying to learn. If it's like motivation and you want to learn about larger investors, you know, you could do that sort of thing. If it's like educational in nature, I don't know that there's a great book that leaves out opinion and focuses more on this is how things work. I think that'd have to be something where maybe you pull up the education in one of your platforms. And it won't be in Robinhood, but like Thinkorswim is a good one. There's an education tab in the platform, and it'll just, everything you could imagine is built into there. So maybe something like that. It just depends on what you're shooting for in terms of a book there. Yeah, if it's like psychological type stuff, like, you know, there's lots of great books on things like that. Well, I should get my list of books. On the other set over there, I've got all the books on the shelf. You can see them in the FinTips videos, but we should break them out one day and maybe, I can't imagine that being a very interesting video, but maybe I could give you a summary of what each of those books are, and we'll go from there. Anyways, all right, I think I've pretty much covered it for you. I hope you enjoyed the day, although sort of lackluster unless you're a Dow player. Enjoy the rest of your evening. We'll be back tomorrow to do this all over again, hopefully with a little more action. 28 days with these, you know, plus or minus 1% inside of a little range there. It's a little frustrating, but we'll be back tomorrow to see what we got. So enjoy the rest of your day. Thank you so much for watching. I hope you'll hit the subscribe button. That means a lot to us. It does something for us, but we're thankful that you do it, and we'll talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose JazzWealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.